J.P. Morgan Chase, Walt Disney help S&P 500 close above 2,900. Dow plus 269.25 at 26,412.30. Nasdaq plus 36.80 at 7,984.16. S&P plus 19.09 at 2,907.41. The S&P 500 gained 0.7% on Friday, as a strong earnings report from J.P. Morgan Chase and a buoyant response to Walt Disney's upcoming streaming service helped offset losses from the healthcare stocks. Friday's advance also helped the benchmark index close above the 2,900 level for the first time since early October. The Dow Jones Industrial Average gained 1.0%, the Nasdaq Composite gained 0.5%. and the Russell 2000 gained 0.4%. J.P. Morgan kicked off the first quarter earnings reporting season with record revenue and net income, fueling broad-based gains in the S&P 500 financial sector plus 1.9%. Wells Fargo and PNC Financial Services also provided better-than-expected results, but Wells Fargo lowering its outlook for FY19 net interest income sent shares lower. In addition to the positive results, optimism about the economic environment from J.P. Morgan CEO Jamie Dimon, and a rebound in Chinese March exports, helped boost investor sentiment. Shares of Disney surged to an all-time high after the company impressed investors with the details of its Disney Plus streaming service Thursday evening. This was resumed with an overweight rating at J.P. Morgan with a price target of $137. The announcement and the overwhelmingly positive response contributed to a 4.5% decline in Netflix. The S&P 500 energy sector, plus 0.2%, was another area of interest after Chevron announced plans to acquire Anadarko Petroleum for $65 per share, or $33 billion, in cash and stock. APC 61.78, plus 14.98. plus 32.0%. The 39% premium from APC's Thursday closing price fueled gains in smaller energy companies, which helped offset weakness from Chevron. Healthcare stocks, meanwhile, continued to fall out of favor. Continued uncertainty about the fate of the Affordable Care Act and increasing threats from lawmakers to curb rising drug costs weighed heavily on the space. The S&P 500 healthcare sector lost 1.0%. U.S. Treasuries were under selling pressure, which drove yields noticeably higher. The two-year yield increased 4 basis points to 2.39%, and the 10-year yield increased 6 basis points to 2.56%. The U.S. dollar index lost 0.2% to 96.96. WTI crude increased 0.4% to $63.91 per barrel. Reviewing Friday's economic data, which included import and export prices for March and the preliminary University of Michigan Index of Consumer Sentiment for April. Import prices increased 0.6% month-over-month in March after increasing an upwardly revised 1.0% from 0.6% in February. Excluding fuel, import prices declined 0.2% in March. Export prices rose 0.7% for the second straight month. Excluding agricultural exports, they were also up 0.7%. The key takeaway from the report is that non-fuel import prices were down 0.8% for the 12 months ending March, while non-agricultural export prices were up just 1.0%. In other words, there was no real inflation pressure from a broader standpoint. The preliminary April reading for the University of Michigan Index of Consumer Sentiment hit 96.9 versus consensus 97.6. markdown from the final rating of 98.4 for March. The key takeaway from the report is that despite low inflation, consumers have increasingly voiced complaints about rising vehicle and home prices. Looking ahead, investors will receive the Empire State Manufacturing Survey for April and net long-term tick flows for February on Monday. Nasdaq Composite plus 20.3% YTD. Russell 2000 plus 17.5% YTD. S&P 500 plus 16.0% YTD. Dow Jones Industrial Average plus 13.2% YTD.